Good evening, everybody. All right. We saw an observable reversal signal today, obviously. First of all, we had the first clue on Thursday when we had a bullish harami telling us the selling had stopped in the oversold area and right on the 200-day moving average. Friday, a little bit iffy. Didn't know which way it was going to go. However, when we woke up this morning and there was positive futures in the Dow, that told us pretty much what type of signal to expect. Again, there's our Doji sandwich. And there's two things we can anticipate. If we have a Doji type day and it starts trading positive, the Doji rule says it's going to go positive. Secondly, if we've got a Doji sandwich, we know what the upside potential is from a Doji sandwich. There's usually going to be more upside. So we saw this in the Dow, saw this in the transportation index. Again, a piercing signal followed by a Doji sandwich up through the T-line. Worst case scenario, it's unless there's something very severe and big to the downside, got to assume that investor sentiment has now negated the bearish sentiment. Today we had kind of a tweezer bottom, a bullish harami in the oversold area on the NASDAQ, another illustration that maybe the selling had stopped. So now that you've got that in the Dow, the transportation index, the NASDAQ, and the S&P, also using the 50-day moving average as a support level. If they open positive, it's a pretty good conclusion that the bullish harami support at the 50, trading positive, we're starting back in an uptrend. Now, will that uptrend be a powerful uptrend? We don't know. We just have to conclude that as long as the indexes start closing up above the T-line, that we're in an uptrend. We don't have to see a powerful uptrend. All we have to do is know that if there's a non-selling, even very slow uptrend, that gives us the opportunity to research which stocks might have the biggest upside potentials based upon their pattern setups. The reason we recommended Arlo today was a bullish harami and a Doji. I mean, that combination right there just makes it very simple. If they start trading positive the next day, this backed off, and then as soon as it came back up through the open, I told you the consolidation was over. The pattern was confirming. As we had a very good attendance this weekend in our mini spotlight day trading session, which I guess the bad news was that the 1 hour planned session that we kind of estimate will probably go to an hour and a half finally ended up at 2.5 hours. John, yes, it does have implications. It tells us they sold it off, and then the bulls came back in with great strength, that they overtook the sellers. This is the important part. The selling was out of the way. The bulls were back in. So I'd say, whoops, I better finish my thought process. We kind of touched on the low-hanging fruit signals and patterns in our 1 hour / 2.5 hour session on Saturday. Hope everybody got good information from it. We're going to be going into a full day trading session on December 18th. And I think I quoted the price for that on Saturday as $297 for members $497 for non-members. However, I forgot this was our holiday season, so those prices are not correct. It's going to be $197 for members, $297 for non-members. Yes, and there was a lot of these Doji sandwiches all over the place today. TJ Maxx, a good illustration. I could probably go through 3 dozen of these. But this is where you can, the Qs aren't above the T line. The Qs or the NASDAQ was the only major index that isn't back up above the T line. But the fact that you had a bullish Harami, tweezer bottom in the oversold area, and the other indexes were all trading positive, and even our little corporate bond index had a strong move, another indication that the bullish sentiment was coming back in. That even though the NASDAQ, as a matter of fact, when all the other indexes were trading trading higher today, the NASDAQ was trading lower. But then it turned around. So it also illustrated that the selling had stopped. Tim, and that was kind of the, that was going to be my next statement. Even though the bullish sentiment has come back into the market, and it's because the latest COVID strain does not seem to be very strong, you still have to kind of equate what the nature of the market is. Now remember, I think they reported 1 case last week out in California. It wasn't significant enough to send that person to the hospital. They just had flu-type symptoms, so they were supposed to stay home and rest up. And that 1 case and all the rhetoric about COVID being back on the rise again slammed the market big time. And over a couple of days, it went down with over 1,000 points. So that you look at and say, yep, that's happened, and now it's over, it's heading back up. But you still have to kind of gauge what the nature of the market is. The nature of the market is that bad news slams it down pretty big. Good news or the lack of bad news takes it back up. However, we're still in kind of a iffy market stage when you have that type of, what do I want to say, blown up news creating big selling, and then the lack of it brings it back. The nature of a market is still pretty finicky, still kind of nervous. And I use that as kind of a caution that even though we might be back in an uptrend, any bad news could still slam this market. And I say any bad news, we don't know what the reaction will be. If Russia goes into the Ukraine or China goes into Taiwan. So we always have to be a little bit careful when the market, now if the market was looking like this and bad news came out, it might not have any significant factor because the bullish sentiment kind of overrides bad news. On the other hand, if you're in a trend like this, any bad news is going to be amplified and kind of accentuate the bearish sentiment. So unless it gets, the market really has to get movement to it to offset any bad news. But again, there's still a lot of world situation out there that could change the direction of the market at the drop of a hat. So that's why I've still been advising, always have safety stops in place. All right, so again, the reason we recommended Arlo today was that if it was trading positive, you had a bullish Doji sandwich confirming a J-hook type setup. There's some more like that, but I forgot which ones they are. I'll have to track them down. Also, things that were moving well, like Chegg, notice what it hasn't been able to do. It hasn't been able to close below the T-line. That still is a viable trade, especially if they break out through this level. And I know people in the chat room are still following this one. Whoops. Fry pan bottom breakout, still in this fry pan bottom, and notice how it uses the T-line as support. And notice what the selling was in this fry pan bottom when the markets were selling off hard. This is another illustration that as long as you stay above the T-line out of a fry pan bottom, you can stay long. Jace, we don't give a hoot about what's going on after hours. What is the candlestick formation? Or what makes the candlestick formations? Everybody buying and selling during a specific time frame. After hours is not everybody buying and selling. Just a little bit of volume. Okay, let me go down through some of these. This one I'm looking at as a short. Look at the bearish engulfing that failed right at the 50. Traded lower. I would still short this, even in a strong market, if it opens lower tomorrow. Now, we had a lot of short positions. Here's another one that I wouldn't be able to, or wouldn't be afraid to short on a lower open tomorrow. Because of the bearish Doji sandwich after a bearish engulfing signal. Now, obviously, if this opens positive and trades positive, it's not a good short. If it opened positive and traded positive, the only time I would short it if it would come back down through the low of today's Doji. That would tell you they couldn't take it up. They're still selling it off. And Saba, another one that if it opens lower tomorrow, another bearish Doji sandwich right about here, which would tell you this level is not acting as support. There's wave 3 to the downside. So we had long positions. This is why each individual candlestick chart is relevant. MCRB, a bearish harami and a close below the T-line. What's our rule about a fry pan bottom? You stay long until you see a candlestick sell signal and a close below the T-line. That was time to take profits. A short on BE, look where the Doji formed today. You're in the oversold condition. Doji right smack dab on the 200, right about where it gapped up before. If you're short here, where's your safety stop? Anybody? No, you're short. today's high. There you go, BR. If they could come back up through the top of today's Doji, after doing a Doji right on the 200, that tells you they've supported here, close out the position. So we have a lot of those, which I will get to. Same scenario out here on Weibo. Wouldn't have covered this today if I was short, but now I'd have a safety stop up here at today's high. And TLA wouldn't have covered today. Maybe I would have taken some off down here as the market was turning around, but I know where my stop is. If it trades positive tomorrow, you want to close it out. Oversold, big hammer, Doji. Where do you think the first target will be? Probably bouncing back up to the T-line. So I'm pointing this out because there were a lot of stocks that gave us some warning. We closed out AFRM. What was our wave 3 target? The 200-day moving average because of the blue ice failure, the dumpling top. However, what happened today? When they gap down in the oversold area, and then they come back up through that open, start taking profits, because that tells you the bulls are starting to step in. Could this go down lower? Yes, but now it's an iffy situation. It could go this way, it could go this way, or it could go this way. But the probabilities with it showing a bullish signal, kind of a piercing signal, in the oversold area, after gapping down and reversing, says, hey, let's take our profits and let's go find someplace else to have better consequences. Here's another one that if you had shorted it on weakness today, after that left-right combo gap down, I would have covered it when they started trading it back up above the open. Because that's telling you they're not selling it off like they should. Now, these are all more sensitive to taking profits when your stochastics are way down here at the low end of the range. And how something opens is very important. We were ready to short Bidu. Look at your bearish best friend. It opened lower. Probably a good indication to get ready to go short. Except look what happened as soon as they opened it. This green. What did that tell us right away? Just without even watching the price movement. Telling us there was buyers in there. Well, obviously we don't want to short something that has buyers. Where would have been, if they had opened this and started trading positive, where was a good place to short this one? If it came back down through the open. That told you the profit-taking bounce was over and they were heading in the right direction. The fact that it didn't execute because it was trading positive until you saw it come back down through here kept you out of being in a short position bad trade. So a major part of candlestick analysis is not only telling you when it's time to get in, it's also telling you when it's time not to get in. Oh, if you shorted him, are you short Bidu? Yeah, I would have closed it out. I would have closed it out when I saw there was enough strength that came up through that level. Because where shouldn't it be trading if they're heading in a downtrend? I always call it Bidu because it looks like Bidu. There's lots of stocks that I give a name just because I started mispronouncing them 20 years ago. So we're in that syndrome of it's hard to teach an old dog new tricks. So this would have been the logical place to cover your any short positions. Same thing over here on Sophie. It opened lower, started trading lower in the oversold area. As soon as it turned green, we covered our short position. And CLSK, same scenario. If I'm in this condition, oversold, and they're gapping it down, I'm getting either they're going to slam it, or that gap down was my alert to say start taking profits if you see it turn around. Apps, same scenario. Not as severe here, but we have huge profits in this. Your best friend signal. This is always a very good sell signal. Not the fact that it did a best friend signal, but the best friend, and look at the magnitude of the selling. I tell you, there's a dramatic change of investor sentiment. Makes it very simple. You stay short until you see a buy signal and a close above the T-line. However, today, with the markets up as strong as they were, and this started trading positive, what was it telling us? Probably the probabilities are starting to go against us. Let's go find a better place for those funds. And obviously have great profits in that trade. Uh-oh. And Myra. Oops. When they gapped it down right at the 200 and then started bringing it back up, I mean, just common sense says, where are they buying? They're buying as soon as they hit the 200. So if you'd been short, definitely would have covered it when it came back up through yesterday's close. So these are just kind of simple stop loss or profit-taking aspects, which we're going to go into a little bit heavier, I think, on Thursday. But one of the major parts of candlestick or any trading program is not only knowing where to get in, but knowing where to get out of a trade. So when we need a stock to open up or down to confirm lately, there have been a lot of reversals after the open. As a general rule, do you recommend waiting a half hour rather than jumping right at the open? Oh, definitely. Now, obviously today they were opening a lot of stocks down. So you wait to see if they're going to stay down. And then after seeing, I don't even know what let's take a gander here. So this was the NASDAQ on the open, started trading off on the 10-minute chart, and then started coming back up, and then finished up positive on the day. So, and this is where you kind of add everything together. If the NASDAQ was trading lower and the S&P opened positive and wasn't having a hard time trading positive, the Dow opened positive and dramatically traded positive, what should be your first thought process? Well, they're not selling off these indexes over here. Or are they trading up temporarily and the NASDAQ will pull the rest of them down? Or do we watch to see whether the NASDAQ is going to be pulled up because the rest of the indexes are up? So as you're sitting here and one's trading lower and the others are trading higher, then you have to start asking yourself, all right, we're over down here in the oversold area. Is this index going to be the only one selling off, or is it eventually going to start coming back up? And if I start seeing this one coming back up because the rest of the indexes were trading positive, then I start looking at my position and say, all right, is it time to start taking profits? And the question shouldn't be so much, is this a specific signal, or is this giving us a potential reversal in the oversold area and the markets are trading higher? Are we better off taking profits and then seeing if there's better situations out there? Let me see what I have done here. The biggies. Amazon. A long-legged spinning top doji tweezer bottom in the oversold area. What would be my trading strategy if I was trading Amazon? The market's open positive and this opens positive. That's a good indication they've bottomed out down here with a tweezer bottom right off the 200, closing back up above the 50. They start trading positive and bring it back up through the T-line. That tells you more than likely we're heading higher. Apple was a strong chart earlier today because it was trading up here, which gave you what type of signal? Gave you kind of a trend kicker signal. Trend kicker signal 1, 2, showing you they were staying up above the T-line. You want to watch the stocks that are kind of associated with the NASDAQ. So here's Netflix, did a bullish harami. If I was short, I would have probably covered at least half of it today, and if it opens positive tomorrow, cover the other half. Oh, I don't know why I put this one down here. That was in the wrong spot. But Grow Generation, kind of the same scenario. Started seeing some buying after gapping down in the oversold area. Not a real true reversal signal. But if it opened positive and I was short, I would have covered the short, anticipating they're coming up to the test the T-line. Tesla had a much more compelling chart analysis because we could wedge was, if I can do it. It's kind of your wedge formation. You had a bearish left-right combo. What it tell you about the upper side of the wedge? You aren't going through. What it tell you about your downward side of the wedge? Well, if they start trading lower, they're going this way. And so what do we see on Friday? We saw them open lower, and there was your bearish doji sandwich. If you were short Tesla, I would stay short. However, did kind of a doji day. Not quite in the oversold area, but what index is everybody watching? Obviously the 50-day moving average. So if I was short Tesla, and tomorrow they started trading it positive, I'd cover the short because that told me at this level, they've decided to start buying. My wedge breakdown is over with. All right, what am I going to do? Yeah. None, that's what I want. Okay. And NVIDIA, very simple analysis. If you were short, they gap down, Doji, not in the overbought, or I'm sorry, oversold area. If they open it positive, you close out your short position. If they open it lower, probably you can even add to, if you've got puts, you could add more puts. EDR. Doji sandwich after an inverted hammer. You can see the rounding bottom. Where do you think your next likely target's going to be? Could be all the way up here at the top of this channel. Right Aid. Bullish left-right combo. Where do you think the next target is likely to be? Probably at least back up here to the 50. Fastenal. Bullish Doji sandwich with a little extra oomph at the breakout level with a Doji sandwich best friend gap up. What do we expect? Wave 1, wave 2. Look how wave 3 was formed with a bullish harami that's supported right off the 34. Then your Doji. Today's positive open. So that positive trading, as we saw in Toll Brothers last week, somebody in the chat room pointed it out. There was your bullish flutter kicker. What do we expect from here? More upside. What did it do today? Trend kicker signal, telling us there's more upside. Somebody also pointed out Beezer Homes. Support right off the 200. Very sure. Doji sandwich. What's our expectation? Wave 1, wave 2, wave 3 up here. Tom, point one out. But if there were, obviously, if something was trading positive but closed near the lower end of the trading range, now you have a little bit more doubt, because even Apple did a trend kicker signal but closed near the lower end of the range. If I was trading this, what would I want to see tomorrow? Them open up positive and take it positive. If they brought it down, especially down through to yesterday or today's open, what'd that tell me about my uptrend? It wasn't going to be very powerful. I'd move my money someplace else. ARMK, that's not a sell signal. That's just merely a good signal. They came up, they hit the 50 and backed off. But now I use the same scenario. It's still a good, strong signal, but I definitely would like to see it open positive tomorrow. And AXTA, not anything real doubtful there. Just, that's just a Doji after a gap up. Still would want to see it open positive. No, not a, well, it could be a flutter kicker signal, yes. If it opened positive and traded positive. Isn't it extended? Will, where's your stochastics? You're not anywhere near the overbought area. Hold on to your individual ones, Jules, until I get done. I'll tell Jim to do the double line, then you can put it in. Okay. So this one started out nicely. Having a hard time, because you can see what the hard time is being illustrated as. Every time they take it up, they knock it down. Up, knock it down. But the other side of the coin is they can't close it below the T-line. So where do my probabilities change to make this a good trade? It came back up through this level. That would tell me my J-hook type pattern is working. LWLG. Pretty junky in here. But look where it closed. Big Doji confirmation. This one I wouldn't be afraid to be buying on positive trading because now you can definitely see your wave 1, wave 2 going into wave 3. And BYRN, not anything wildly exciting except for the fact that it did a kicker type signal up through the T-line. That would suggest you could be buying this one on positive trading just using the T-line as your stop. There was a bunch of oils that were doing the same thing. There's kind of your bullish trend kicker doji sandwich. No, I thought I could segue right into some of these. No, maybe it was just that one that was acting well. So here's another case where it recommended buying this one on positive trading. Now, if we bought it here, we would have closed it out here, because why were we buying it here? Because it was breaking out through this level with a good, strong, bullish flutter kicker. The fact that they closed back here did two things. One, not a good, strong signal because it's a bearish engulfing signal, even though you're not in the overbought area. But two, pretty much told you they weren't breaking out through this level. Go find a better place for your money. Is a doji sandwich a signal or confirmation for a directional move? I call it a signal. Anytime I see that doji sandwich, first of all, you can have two elements to it. One, anytime I see a doji sandwich, even as a day trade, you can use it because the probabilities are extremely high because of the doji rule. You're heading in the right direction. And two, it is a directional move because we know that after a doji sandwich, the probabilities are there's going to be more upside. That's why the McMuffin is so good, because it's a Morningstar signal, which is an indication of more upside, followed by a doji sandwich, which is an indication of more upside. So there's a double whammy of positive trading for more upsides. OSCR, Oscar, doji, gap up through the T-line. That one I would not be afraid to be buying on positive trading. So it's usually the stochastics, unless you're way up in the overbought condition, is usually going to be a continuation of a trend. I'll try to point it out here somewhere. And this is where we like to see the stochastics, is when it's just starting. Obviously, that's much stronger. But even right here, when your stochastics are up in this range, tells you also you have a breakout. So, yeah, the stochastics come into play. Obviously, if you see something like this with the stochastics up here, you're going to be a little bit more attentive to see what it's planning to do from that level. XPEV, the electric vehicle sector, getting whacked pretty hard over the last few days, but there's your bullish Harami hammer signal right on the 50. That you start watching. Oops, this wasn't a lie you could watch. And Lucid, I guess they even had some bad news that they were being investigated or something. But you can see what happened when they gapped it down. They started buying. You keep an eye on this one, especially if it comes back up into the back up through the T-line. I'll get to your question in a little bit, Ron. This one, observe the obvious. They came up through the resistance level, hold back, and what's everybody observing right here? That they're not closing below the T-line. I'm sorry, the 50-day moving average. And when everybody sees they're not trading below the 50-day moving average, that means they have much more confidence that this is now acting as a support. They can be buying with more confidence. Build-A-Bear, after the big gap up, the consolidation, I would still suspect a 45-degree off of here. And Goose, this is one of those where if you're going to find something to buy at the bottom, look where the bottom is. Right there. Got a bullish Harame hammer type signal in the oversold area. Where do you think your first likely target's going to be? If they start bouncing it, they're going to come up and test the T-line. So depending on your strategy, some people like to buy at the bottom for the bounce. Other people like to buy at the breakouts. Whatever your trading nature is, you can always find something that that you can add the probabilities just visually, where there's a buy signal at levels that everybody was buying at the last bottom. TJ Maxx, Doji sandwich, bullish Harame, right off the 200. Where do you think your next likely target is going to be? Somewhere up in this range. So this is all based upon the signals, the trend analysis, the pattern. You're trying to put as many positive factors into your analysis as you can. ASAN, another one to illustrate when you see that bearish big best friend signal, anticipate your downside is in progress. There is, when you see a close below the T-line, the probabilities of being in a downtrend are greatly in your favor. Let's get rid of all these. So the often rhetorical question, do you always get big moves like this to the downside? Well, at least with your shorting up here, where you can see a bearish doji sandwich, a bearish doji sandwich, staying below the T-line, can't get up above the T-line. Do we always get big moves like this? Definitely not. But when you do, the magnitude of that move is going to be substantial, where all the other little moves, pluses and minuses, all disappear when you start having a few of these big percentage moves in your portfolio. You don't have to be right on every one, but when you recognize what the strong buy or sell signals are, just a few of these can dramatically improve the balance in the portfolio. And that's why using the T-line is very important. Because if you're getting lots of small gains, small losses, and then you're cutting your gain potential short, I mean, that kind of takes away from the whole purpose of trying to find the big percentage moves that can offset all those little gains and losses. Oops, we already did this one. Yes. So a lower open tomorrow after bearish engulfing, at least coming back to here, and or here, or here. So you're looking at something that has a potential of making a 45, 55% profit. So even though we saw a lot of buying today, there's still charts that say, well, don't need to worry if I was short this one. This is net. Not anything that tells me there's any buying going on here. NVAX, bearish left-right combo after the gap up. Bearish flutter kicker. And today the market was up 768 points, and they were still selling this one off. What is that one? Bearish left-right combo, bearish doji sandwich. What can we anticipate from this chart? Even though the market was up strong today. Wave 1, wave 2, going into wave 3. And CCXI, was this the one I wanted? Same scenario here. If this opens lower, what's it tell you about the 50? 50 is not going to act as support. Where's your next target? Down here. So this is nothing more than just 2 plus 2. If we know what should happen based upon what we expect from a signal formation, if this opens lower tomorrow, expecting that type of move, it pretty much tells us the 50 is not going to act as support. Well, the big banks, I think Ron was asking this. That didn't look too bad. Whoops. JP Morgan, and nothing wildly exciting, but not anything terrible. So it's not like the big, it just really didn't move. Jim, yes, and that's because of the decision-making process. If you're buying something, what decisions does everybody have to make? They usually say, all right, where do I want to buy this? How much money do I want to put into it? And am I sure it's time to get in this market? So you had 3 or 4 decisions before most people make a buy decision. If they see selling, they've only got one decision. They say, sell it, and click so it's a lot easier to sell. Yep. Okay. I'm thinking that's about all I've got for tonight. Still a couple of very good buy setups for wave 3, but also at the same time, there's some very good sell prospects for moves to the downside. Okay, so with that, are there any general questions on candlesticks? Very simple, Harry. On ACET, what's your trading strategy? The Doji rule. You want to see it open positive. If it opens positive, it's probably going to trade positive. If it opens positive and starts trading positive, where do you put your stop? At the Doji, because it shouldn't come back down through that level. WB, I don't have any information. I don't really follow that. But stock prices will tell me. Whoops, down. We were supposed to wait till the double line. So there was positive trading after it bounced off the 34, which tells me if they trade positive and I was short, I'd cover the short position. Did we do Daku? Oh, Daku, I would stay short if you're short, and I'd probably use that level right there as my stop. Shouldn't come up there. Oh, probably if it opened positive and then closed back below the halfway point of this candle, what it tells us about our breakout if you were buying on the breakout. It didn't break out. Close it out and wait for the breakout. Okay, so mark your calendars for those that were interested in day trading, or day trading or ultimate swing trading entry points. December 18th is our kind of our full day schedule, which means we're planning on 4 hours. But from the amount of information I've accumulated so far, there's top ranked, what I would call ultimate entry level pattern setups, 6 hours minimum, probably closer to 7 hours. It will be recorded. And last Saturday, yes, all our sessions are recorded. Okay, I guess with that, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. Wynn Resorts, you could be buying this one. Then you wouldn't want to see it close back below the T-line. Las Vegas Sands, not as strong a signal, but you can buy this one. Just watch to see what happens once it gets to the 50. Dare, you could be buying this one. Just make sure your volume is hefty on a dollar stock. ACIW, bullish. Doji sandwich. Wouldn't be afraid to be buying that one. Chubb, same scenario. Kind of a scoop type pattern. Wouldn't be afraid to be buying that one. Good charts. Blue. Right now, if you are short, you stay short. You don't buy this until it gets back up through the T-line. And golden, that's a nice bobble breakout. That one you could be buying. Just be aware that your percent return may not be great, but you're heading in the right direction. And SVC, change of investor sentiment. You could be buying this one using the T-line as your stop. FGen, still a fry pan bottom. You stay with it. Harley, sideways. I'd be someplace else. Nothing on that chart to get excited about. NVGS. Another one, the Doji rule. If it opens positive, you stay with it. If it opens lower, it tells you they're having a hard time getting through the 50. Kicker signal, Doji sandwich. That's a good, strong chart. Wouldn't be afraid to be buying, anticipating wave 3. AVYA, nothing of any great concept. If you're short, I'd be ready to cover it, but I wouldn't be going long. That's kind of a sideways chart. Marvell. Wow. Did I do that wrong? Look for a 45-degree off of here. Now look for it to move in this direction. Zeus, stay short. And Smith & Wesson. If I was short, I'd stay short, but I'd have a safety stop at today's high. Visa. Kind of a little trend kicker. You can buy this one if you like. And again, it's an institutional trader. You're not going to get a whole lot of price movement out of it, percentage-wise. Gold resources. Nothing here yet. Not until they can get up through the T-line. ESNT. If this opens positive, you've got kind of a trend or a bullish flutter kicker. I would suspect your first target is here. And if they came up there, they're like probably going to the 50-day moving average. Southwest, like a lot of the airlines, this one you could buy. It's got a little trend kicker type signal, but you definitely want to see this tomorrow. And Teradyne, nothing of any great consequence here. Wouldn't probably pay attention until it at least got up through this level. Tupperware, nothing. Would not be long or short. No direction. Viacom, road. Viacom, you get ready to buy this one on positive trading tomorrow because of your McMuffin setup, Morningstar signal. If this one opens positive tomorrow, you could be buying right away. Walk Me. This is a dog walking company. If you're short, use today's high as your stop. If you're short, it needs to stay in this direction. You signal. Bye. That type of signal told you there was more downside. That was on Twitter. Costco. Nothing here. I wouldn't be a buyer yet on this until they can close it above the T-line. AUPH, not doing much of anything. I'd be someplace else. Target. Oh boy. If you're short, you can stay short. If you weren't short, I wouldn't be long or short on this one. Not enough movement. ACAD, same scenario. Not enough movement one way or the other. I'd be someplace else. Meaning, when I say there, I'd be someplace else, there's a lot better charts that are giving you directional information than those that are kind of bobbing sideways. POGZ, you could buy this one on positive trading, anticipating the uptrend remains in progress. T-Mobile, stay long. Just watch to see what happens once it gets to the 50. Each paying big dividends the next few days. All right. You can see the bobble breakout on this one. Yes, the obviously with a lot of them sitting offshore. Steady X and here on Oxbridge, you just stay long on this. Nothing here. If you were short, I'd be covering the short position. You can see the indecision would not be going long until you see confirmation above the T line. And socks, I'd probably be trading something else. Matador, nothing. Would not be long or short. Very, you can stay short, but I would use today's high as your stop. How do you recommend sizing a full position as a percentage of your portfolio? Tom, I take my portfolio, whatever amount it is, and I divide it by 10 equal positions. So if I've got a $500,000 portfolio, that means each position is going to be $50,000. Now, the reason I do that is because we know what the biggest bugaboo of our investing is, and that's our own emotions. So anytime I put on a position, I want it to be just one unit of my portfolio. As soon as I buy more, because I know I'm smarter than everybody else and smarter than the market, now I've got my emotions into that trade, and I'm not making the same decisions. Every time I keep it at an equal dollar amount unit, I'm making a decision about a unit in my portfolio, nothing that I've got my own ego built into. Shake Shack, if I was short, I would have covered the short today, but I wouldn't be going long just yet. No, it didn't really reverse. You had a bullish Harami that told you to sell into the stock. You don't really have a buy signal here. You just wait to see if the signal does. So if you see something going up without a signal, the first thing I watch for is the first resistance level. If it's not a signal, it doesn't mean there won't be buying. Just means it's not going to be as forceful. Don, have you not been reading your information? A bobble breakout is a J-hook pattern that can be easily identified. Well, Shazam. I did that real quick. This is a bobble breakout. You can see how they came up and they failed at the 50. They pulled back, used the T-line and the 200 as support, and came back up through the 50 that everybody was watching before. Now they see that the 50 is not acting as resistance. Your next wave is in progress. It's called a bobble, which is a more defined J-hook, because if you took the 50 out of here, you have a J-hook pattern. The fact that you do have the 50, we have the benefit of seeing where the support is, and the T-line is a factor, but everybody else watching it aren't watching it because of a J-hook pattern. They're watching to see what happens if it can get back up through the 50. And when it does, that's when they start buying. Just a very high probability trade setup. Open, if I was short, I would have covered the short. Would not be going long just yet. Ego, if I was short, definitely would have covered it probably on this day, right here or right here. You can get ready to buy if this opens positive tomorrow. ADGI, if you were long, I would have been out of it today. That's now not a bullish chart at all. That was a clue, and then there was no follow-through. That's a big unit size. Tom, all depends on what you consider your capabilities are. I always illustrate that Susie Orman says you should never have more than 4% of your money in any one position. That means you've got 25 positions on. And the illustration of that is they pay endless millions of dollars in Wall Street to follow 6 or 8 companies, and most of them can't do that very well. So how do they expect somebody to follow 25 stocks? 10 I can look at in the matter of 45 to 55 seconds each evening to see which ones I might have to change. I don't want to be spending all night long analyzing all my positions. So there's 10% on each position has 2 ramifications. One, it's not big enough on each position that if one of them gets slammed, it's going to kill my portfolio. And 2, each one is big enough effect on my portfolio. I want to give it enough attention to make sure I should be holding that position. Okay, last one, Visto. If you were short, observe the obvious. So you did a bullish Harami Doji in the oversold area right on the 200. If I was short, I'd be ready to start covering it if it starts moving positive, especially if it came up through today's high. All right, so it'll be important to see, it wouldn't be unusual to see them bobble around here at the 50 for a day or two, taking some profits. But right now, with the bullish Doji sandwich, the implication is that there's more upside. I would factor at least coming up to fill this gap. I risk 1/4 of 1% of my trading capital on any single trade. All right, to each their own. My trading is different. I'll be 100% invested. And the reason for that is because of the simplicity of candlestick scanning, I will always have more trades than I can handle. Now, that doesn't necessarily mean I'm 10 long positions or 10 short positions. It might mean I'm 8 long, 2 short, or 7 long, 3 short. But I know that every time I put on a trade based upon the candlestick charts, the probabilities are in my favor. I'm going to be in the right direction. Well, yeah, if you're not using your full portfolio, deploy the dollar amount that you are using for trading, and then break that up into segments. That's more SB, my investment capital. So I've got trading accounts and I've got investment accounts. Now, I don't have a whole lot in long-term trades because in this day and age, with so much information that can be rapidly disseminated, what looks good today in 3 months from now might be obsolete because of new technology, new political stances, all sorts of things. So the concept of buying and holding long term is kind of diminished because unlike 30 years ago where you got your information mostly from your stockbroker, today everybody has access to all the same information. Don, yes. We'll do a scanning session here during the snowy nights. But yes, there's all sorts of formulas that you can use for finding the trade setups. a lot of those formulas, if you go down into the folder, down in the very right-hand corner of the page, you can find a lot of those formulas. Okay. Whoops, didn't keep us too past bedtime. What page? On this page, if you're looking at your chat page, Tom, if you look down in the very right-hand corner in the gray line, you'll see a little folder down there. All right, everybody. We will see you bright and early in the chat rooms tomorrow. Oh, no, I won't. Be a little bit later. I got to take Sandy to the airport. All right. Well.